Hello, everyone. Welcome, 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 welcome. Nice to have you. It's such a beautiful day. Hope you guys are having a good weekend. Um, I would like you guys to use the chat as much as possible. My name is Ola. For those who don't know me, I'm basically a finance professional. I've been a trader for over 12 years. And it's a pleasure to actually host you guys today, talking about how to invest in stocks. So just by way of starting or giving some guidance to how we would run through today, it's going to be about 45 minutes to an hour's presentation. I would appreciate if you ask questions as you go along the way. So if I make a statement you don't really understand or you have a thought around it, please use the chat box. The chat box is open right in front of me. I'm more interested in the chat box than even my own presentation right now because I want to know what your thoughts are and if I'm carrying you guys along. So that's it. That's like the most important thing. I want to hear you guys. So yes, I know that I can't unmute everyone, but I really want to hear, have a feel of what's going through you guys' minds. And if you need me to slow down, but it won't be a slow down thing. It's going to be interactive. I'll ask questions. I'll expect responses in the chat also. So let's do this. Are we ready? I want to hear yes in the chat box. I want to see your yes, please, in the chat. Are we ready? Yes, yes. Oh, for Marv. Hey, Marv. Yes, for Ngozi. Yes, Oladipo. Yes, Tinuke. Yes, Esther. Great, 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 great. Yeah, that's nice. That's good. Let's do this. So we're talking about how to invest in stocks. And one of the things that I realize is that a lot of people just blank out when it goes to like standard of traditional financial products. By traditional financial products, I mean stocks, I mean bonds, I mean treasury bills. And it's understandable because when the professionals start talking, they all talk like with technical language and we don't really understand what they're saying. And so you just switch off. So today I'm going to be explaining how I select stocks, and I will be using simple English, things that you can relate with. Now, this year has been quite interesting because some people have actually lost money on the stock market this year. Well, for me, for example, I have actually made over 100% return on the stocks that I choose. Now, to put it in context, yes, everybody has heard, okay, that the stock market has done amazingly well, but the truth about it is that some stocks have actually not done well. So it's not just about the environment, there's also the part of selecting stocks. And so today I'll be talking about how to select stocks, how to invest in the stock market. And another thing also that I want to give as a background is the fact that a lot of people also have a bias against stocks because you've seen a family member that has lost money on the market. In the market, you've seen people that put all their life savings or put school fees or put any of those things, and in the end they had nothing to show for it, but the truth about it is there is actually a technique and a knowledge and a wisdom to stock market. It's not to stock market investing. It's not a random event, right? There are ways, and that's what we're going to talk about today. So the first thing I really want everybody to do is open your mind. You can actually do it. It's not for the techies, it's for everybody, right? And you can do it. So we're going to start with, can you guys see my screen? Yes, if you can. So this is like the outline. Yes, great. So it's basically about capital. This is the outline. We're going to put stock investing into a context, and we're going to explain the different rules, and then we would actually go through the process of selecting stocks right now, like on this call. And so you actually understand the reasoning and how people make those decisions. Then I'll explain my current stock investment portfolio and why I selected those stocks. And I'll tell you how to start, because the idea for me is not for you to just have information. It's actually for you to have information and then use it. And the best thing is to actually get information now, decide on step 1, step 2, step 3. And then you know that on Monday, because of course the stock market is closed today, you know that on Monday, the first thing you're going to do is go and do this one, then this one, then this one, and you start the journey. That is what I want to come out of this. It's not just about theory. So I hope you guys are with me on that. So It's all about capital. So this guy here, his name is Mark. He started a shoemaking business called The Shoemaker, and he's been running the business for like 3 years. And it has actually grown to a point where he needs to expand his operations, right? So, and he needs about 5 million to complete a 2-year revamping of his total process and technology and blah, blah, blah. He needs about 5 billion, but he obviously doesn't have that money. He's a young guy that started out something and he didn't expect it to blow, for lack of a better word, right? So he needs about 5 billion and he doesn't have it. What options does he have? The capital market. Now, let me put that in context. There's a market where people that have excess cash are looking for people that are in need of cash to fund their transactions. So that's what the financial market is generally, where people that have excess cash are looking for people that need cash and are going to make profit, and it's going to be mutually beneficial to everybody. Now, in a scenario like this, as an individual, so let's say I earn 100K every month and I'm able to live on 70K. I have 30K that is lying idle. The idea is I can go to the financial markets and find people that need money. So for example, you can have a friend who needs capital for their business. You can find someone that wants a personal loan. You can find all sorts of people that need money and give them the money. So for example, your friend that is running a business, you might decide to say, okay, I'll give you this money for 2 months and then we'll get it back with a particular interest. Or I can buy into your business. I'll be a part owner of your business. That's also the stock. That's also the financial markets. Now, for the person that gives the loan for 2 months, it is actually called money markets. But for the person that decides, okay, I'm going to give you this loan for 5 years, it goes to the capital market. So the difference between capital and money market is the tenor. Once you need long-term money, it is the capital markets that you go to. And that's what Mark did. He went to the capital markets. And the major thing I repeat is that capital markets for long-term investment, and the fact that it is for long-term will actually come up later as we go along the way. So you see how these things tie together. So what are his options? He can borrow, meaning that he can issue a bond, a 5-year bond. He says he needs 2 years to revamp. But even if he does 2 years to revamp, he still needs to make money to pay back, right? So he can't exactly issue a 2-year bond. You probably have to issue longer so that he has time to recoup the money spent, make profit, and then pay back, right? The other option, which is less stressful, is for him to sell part of his company, which I'm sure we know about that, which I'm sure by knowing about that, I mean, we've seen people that have issued shares. I've said, come and invest in my company. I'll give you a percentage, blah, blah, blah. That is issuing equity, right? So he chooses to issue equity. Now, in that issuing equity, there are now still 2 options. He can decide to sell to private investors. Like private investors means he will come to Ola and say, Ola, I have this investment. It's just between the 2 of us. We'll sign our documents. You'll be a part owner. I will change it with CAC and we are fine, right? That's what we call either private equity or venture capital, depending on the stage of the company. But the second option is that he can sell to the general public. By general public, I mean he can go to the stock market, the stock exchange, and list his company, and anybody, anywhere can buy, right? Now, that public equity, which is what it actually is either called stock or shares. We all know it more as stocks because it's referred to as the stock market, but it's also called shares. It's also called public equity. So think about it. Anybody buying into his company is actually taking an ownership, buying a part ownership into his company. Think about it that way. So Mark chose to sell to the general public. Now, who is the general public? This is very, very important. Let me tell you why. And I put it in a certain order. The pension funds, insurance company, asset managers, non-finance company, and individuals. The truth about it is that the person with the most money drives the market. If I have the most money, I can decide I want to buy up all the stocks. Think about tomato, right? Imagine if Dangote is throwing a party for his whole state. right? And he decides that he needs to buy tomatoes, or he's getting caterers and needs to buy all the tomato to feed the whole state. What will happen? Whether you are an insurance company or asset management firm, or you're an individual, the price of tomatoes is going to go up. You would feel it, right? So I put it in that order. So the major people to look at when we're talking about the stock market are the pension funds, because they set the tone. They are the ones with the most amount of money. Now, in the Nigerian stock market, before 2018-ish, yes, 2019, offshore guys, like the foreign investors, were a major investor in our market. They even had more money than the pension funds. But because of this whole dollar uncertainty, elections last year, blah, 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 we have taken back our markets. Now, this is putting everything in context. We have taken back our markets. The pension funds are now the major drivers of our market. Where you will see this impact is the fact that one of the things that is to keep our currency stable was when offshore guys will come in large amounts of money, but it's not happening right now, right? So that's why we're struggling with our currency. So let's just put that to this. That's one of the reasons we're struggling with our currency right now, because we don't have offshore inflows as we used to. So look at this in order: the pension funds, the insurance companies, the asset managers, non-finance companies, and individuals. Now, I'm giving you like a background before we go into the real thing of how to actually select stocks. Now, this pension fund thing, I will talk about it later and I'll put it in context. So I want to confirm, has anybody seen something like this before? IPO, this one offers this, GTB offers this. Has anybody seen anything like this before? In the news, in the papers, anybody? I want to see your responses in the chat. Anybody? Oyekachi, yes. So now this is like the standard announcement. Oh, Bolu hasn't. Okay. So yes. So what happens is that when a company decides they want to be listed on the exchange, they have an initial public offering. Think about it. Initial is the first public offering. So what it is, the first time they are coming to offer to the market, that is what an initial public offering is, right? Now, so what I'm going to explain here is these are the things that you generally see. So Mark is also, rather not Mark, Shoemaker PLC is offering 5 billion units of Shoemaker shares at 1 naira per share. Offer opens on the 1st of November and closes on the 10th of November. Successful applicants will receive notice of allocation on this day. See prospectus for additional information. So the first thing I want to, so in explaining this, I want us to try and reason it out by ourselves. What is the value that he's going to raise here, and how would you calculate it? How much is he going to get if he issues this successfully totally? Can anybody try and say how they arrived at it? Anybody? What is the value he's going to raise? Who can try? Anybody? He's issuing 5 billion units at 1 naira per share. 5 billion naira. Anybody else who agrees? Any other idea? 5 billion. So what happens is he has decided that he wants to sell his company, and decided that he has broken down his company into 5 billion units, right? Tiny portions. And he wants to sell each portion at 1 naira. So he's going to raise 5 billion at the end. Now, where this is important is that you can decide you want just 50,000 units. How much would you spend? Who can guess? If I decide I just want 50,000 units, how much will I spend? Anybody? 50K, exactly. So what he does is that he issues it out to the whole public, everybody. And then he now decides, then everybody decides, okay, me, I have 200K, another person has 1 million. The pension fund guys can decide, oh, we like this guy. I'm going to buy, and one pension fund can actually buy the whole 5 billion at once, right? But that's how it's, I'm just showing you, I'm just putting context to size. But what happens is that on the first day he comes to the market, the first value for his stock is 1 naira. And if you buy on this day, you would buy at 1 naira per share. And then what happens is that on a future day, let's move on. Okay, so now before I jump to that, now this place where he comes with the initial public offering is called the primary market. This market is between the issuer and the investor. Who is the issuer here? Who can guess? Because I'm trying to break down some things that we see so that we understand it. Who is the issue? Who is the person issuing this stock? Can anybody guess? Shoeco Limited. Okay. Shoemaker. Okay, that's great. Now, it was quite important for you to understand that it is shoemaker, it's Shoeco company.
No, it's two. One for you, one for Anthony. Yeah.
Sorry, can you mute yourself? Okay. So I find a lot of people also say that Mark issued this stock. Therefore, if anything goes wrong, I'm going to hold Mark. Guys, that's not the way. And I'm glad that people don't have that mindset here. It is the shoemaker company that is actually, that you owe anything. Once a company is listed, it is no more, and it is an entity on its own. The people that issued the stock are less relevant at that point. They are only relevant to the extent that they are managing the company for you. They're only relevant to the extent that they are managing the company on your behalf, because you are actually an owner, a part owner of this company. So imagine if you had 5 billion, you buy up everything and you're good to go. Do you understand? So one of the things I need to understand about stock market investing is that you are actually buying a company. You are transfer your money to own a share or a portion of a company. Now, like I said earlier, so the market between the issuer and the investor is called the primary market, right? Now, Shoemaker is now listed on the exchange. And have you guys seen this thing, the ringing of the bell? When the market opens at 10, somebody comes out to ring the bell, right? Basically, it's whenever, like if your stock gets listed, you just come and you ring the bell, and they announced on news. So if somebody does something grand, the person will come to the stock market, and it's a sign of honor for them to get the opportunity to ring the bell. Now, so Mark comes, he rings the bell for the opening of the market. It's called the opening bell, and it's one of the things that they used to honor people in the stock markets. So when you see that, understand what's happening. So you now decide you want to buy 5,000 units from the stock exchange. So you see a bid at 1 and an offer at 1.1. The question is, if I want to buy 5,000 units, what price am I going to be buying at? So the bid says what price somebody wants to buy from me at, and the ask is what price somebody wants to sell to me at. So if you're going to sell to me, you're going to sell to me at 1.1. If you're going to buy from me, that means if I'm selling, I'll buy from you. You're going to sell to me. Let's slow down. The buy price is if you want to buy from me, that means I'm selling to you, you're buying from me. I'll sell to you at 1. I would buy from you at 1.1. So I find this is very, very important to understand, because when people look at the stock market, they look at bid, but they look at it from their own eyes. The person showing you the quote is quoting what they can do. So think of the reverse. If you are buying, you are going to buy at 1.1. If you are going to sell, you are going to sell at 1. Is that clear? It's very, very important to understand that. So when you see the price, when you see the price, decide on what you want to do, and then you do it, you do the reverse. Do you understand what I mean? So if I'm buying, I will be buying at 1.1, meaning that if I want to buy 50,000 units, I will be buying 50,000 times 1.1. Hope that is clear. Please, I need a thumbs up or a yes. So you buy higher than you sell. Yes. Now, the reason why so I think that's a very fantastic question. Yes, you buy higher than you sell in this context. You are dealing on somebody else's quotes. Let me explain. The market is showing you a quote. Everybody's facing the market. The market is showing you a quote. So a stockbroker is telling you, if I want to buy, I will buy from you at 1. If I want to sell, I'll sell to you at 1.1. In his mind, he's making 1 kobo or 10 kobo on each stock. Do you understand? So if you need to do the trade, which is what happens, so the market can be, so you can buy a stock at 50 naira, and the bid on the offer is 50.5, for example. And then when it's time you can buy a stock at 50 naira, bid is 49, offer is 51. The truth about it, if you want to sell, you're going to sell at 49. That's how the market moves. That's how it is. Because you are selling to somebody else and you're going to deal on the person's bid. And if you are buying from someone, you're going to deal on the person's offer. Is it clear? Now, if you are buying directly from the primary market, from the issuer, right, you would buy at 1 naira. But the question is, someone that bought at 1 naira, why would they sell to you at 1 naira? If there's no distress, if market is calm, the person must make a premium. So basically he's saying that if I'm going to buy, I'll buy from you at 1 naira that it was issued at. But if I'm going to sell, I'm going to make 10 kobo on it. That's logical. You want to make money off it. And if you are the buyer and it's not fine with you, you take a walk. But the only thing that happens is that if the offer was 1.1 and the next time you come, the offer is now 2 naira, you'll be sad. So the question is, why did you decide to buy in the first place? I hope that's clear. If you have any other question, makes sense. Okay, that's good. So now what we've talked about is the secondary market. In secondary market, there are two sides. There's always a buyer and a seller. For every trade that needs to be done, there's an investor buyer and an investor seller. The primary market started with the issuer, Shoe and Co. So if you bought from the primary markets, you transfer the money directly to Shoemaker and Co. directly. But if you come to the secondary markets, it is just that somebody that bought directly from Shoemaker and Co. is going to be selling to you. Is that clear? So there's no Shoemaker and Co. doesn't come into the conversation anymore. As in Shoemaker and Co., the company, the management, whoever they are, in terms of individuals or whatever, doesn't come into the conversation. What you are doing is that you are buying from somebody that bought directly from Shoemaker and Co. You are not facing Shoemaker and Co. anymore. The 5 billion Shoemaker and Co. has raised, they have raised it and keep it moving. Just move on. Now, so take notes. What happens in the stock market, in the secondary market, that means the price movement. So for example, the 1.1 offer, if the person sells at 1.1, he has made 10 kobo, but that 10 kobo comes to him. It doesn't go to Shoemaker and Co. Right? What happens in the secondary market has no impact on the issuer. What happens with the issuer actually affects the secondary market. What I mean by that is, if, for example, people buy Shoemaker and Co. and it's at 1 naira, 1.1, and then you now hear that the owner of Shoemaker and Co. was cooking the books, people would actually sell it until it gets to 10 kobo because they feel like, okay, the company is going to dissolve, right? So let me take out whatever I can from the company, right? But the truth about it is that even if the price goes from 1 naira to 10 naira, it doesn't affect the issuer in any way. Like the issuer doesn't make any money. That 9 naira difference doesn't come to the issuer in any way. It is the investors that are making that profit. The issuer doesn't make that profit. However, if anything happens with the company, it will affect the stock, the pricing of the stock. So every time you buy shares, you are buying a company. So just understand that you are actually buying a company. You are not just buying a paper or a list in your stockbroking account. You are actually buying a company. So what you do on the stock market does not affect the company, but what the company does affects your portfolio and affects the stock on the stock market. I hope we get that. I'm just laying foundations here so that, and then there's a simple quote here that behind every stock is a company. Find out what it is doing. So one of the things that I realized, and I'm going to talk about pitfalls mistakes that people make, is that people just buy stocks for stock's sake. Oh, this stock is going up, this stock is coming down, right? But they don't actually know why. They don't look at the company. So sometimes the stock might be going up because the company has made a news that has released a news. Or it might be coming down because the company has said, okay, has come out to say that there's some loss somewhere that did not know about, or there's fraud. And you think, oh, the price is now down, let me buy. If you don't know why, if you're not tracking the company, then you can actually get into a mess. So let's be guided on that. So let's do a simple trivia. Now we're getting into how to select stocks. Like literally, this is as quick as it gets. You are a farmer, you live in Lagos, and I want to see as many people's responses. as possible in terms of the options. You are a farmer, you live in Lagos. You have strawberry seeds, I'm very particular, strawberry seeds, and you want to grow strawberry anywhere. It can be anywhere. What are the things you need to align for your strawberries to thrive? Now, what are the things you need to work? I need ideas. I need people to think. I need to hear people right now. Honestly, because this is the reasoning. You need land. Okay, land. Okay, what else? Somebody has said land. Right climate, good weather, finance, fertilizer. So I'm not talking about farming things, not about money, just farming things. You find a good land area that suits strawberry, fantastic. I'm talking about the farming itself, not about logistics, just farming itself. So staff and all that doesn't need to come in. Farming equipment, okay. Land with appropriate soil, exactly. Watering, quality seeds, fertilizer, irrigation. And that's a very valid point. Now, let's say your strawberry seed is very good. I like some of the responses I see. Try to look for a strawberry mentor. Good soil, exactly. Now, the truth about it is that even if, let's break it down from the top. So you have seed, good seed, assume the seed is good. You need to have the right type of soil, right, that would allow strawberries to thrive. You need to have the right, somebody said the right land with appropriate soil, exactly. Then a good land area that suits strawberry. The right climate, somebody said climate, that's also good. Good weather, that's true. Now you agree with me that you almost cannot grow strawberries in Lagos, except if you have a greenhouse farm, right? Why? Because what is hydroponic location, okay, but the reason why you can't grow strawberries like in a regular, like you have good soil, you find out where the soil is, you import the soil, and you say you are in Lagos, you want to grow strawberries, because strawberries grows in colder areas. For you to be able to grow your strawberries well, you need, at least if you decide to do it in Lagos, you need a greenhouse farm. If you decide you don't want to do it, you don't want to go to the set of doing it in Lagos, you can say, okay, let me try Jos, because I know they're able to grow strawberries in Jos, because it can get quite cold. Now, if Jos cannot work, and all you have is actually your strawberry, you might have to go to a temperate region to grow your strawberries. That is how the weather actually affects your produce, right? Even though you have the right seed, right? You can't say that the seed is good. This seed was one that produced 1,000 hectares of blah, 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 blah. Then you come and farm in Lagos. In this heat that we're struggling with when the other side of the world is frozen, right? So that is how the economy is and stock market is. And I'm going to connect the dots right now. Now, think of it like this. You have your money, right? You have the stock, you have the company you want to invest in. The company is in a sector, but the sector is in an economy. If the economy is not right for that company, whether it's in terms of timing, in terms of policy, in terms of general direction, no matter how hard the company thrives, right? No matter how hard or how well the company is positioned, no matter how much capital the company has, no matter how smart the people in the company are, if the economy is not right for it, it won't work, no matter how hard you try. And this is one mistake I realize that people make when it comes to stock investing and in investing generally. You think about the company, oh, it's a good company. You think about, oh, the sector is fantastic. It's a viable, everybody must do this, everybody must do that, everybody must do that. But if the policies that are driving that sector or the general economic environment doesn't support it, the truth about it is your investment is going to go bust, right? Your investment is going to go bust. And let me tell you for a fact, every stock market crash has been driven by the economy. It's not because any company was bad. Do you guys agree with me? And this is where a lot of people miss it when it comes to stock investing. You don't read the weather before you decide you want to invest. And then we'll talk about reading the weather because it's going to be quite. After I've done all the theory that we're going to do. After this, we're going to be talking, right? We're going to be. What does that mean? You also examine the company patterns of investment also. I'm not sure what you mean, but I'll take it to mean that how the company does their business, not invest, because I mean the company should be doing some form of business generation or revenue generation. Okay, yes. Does that mean you also examine? Yes, you actually do. So you're going to consider the company, right? But then there's actually a right order to invest in. You actually look at it. So the right order to invest in is start from the economy. What is happening in the economy, right? And depending on what's happening in the economy, there are some things that will thrive and some things that will not. So identify the things that will thrive, the sectors that will thrive, then put your head there. When you now identify those sectors, now drill down to the companies and the patterns of their decision making. Do we understand? Is it clear? Does it make sense? I want to see your yes, your no, your questions. So, and I know that economy sounds like, hey, how do you understand what's happening? And I will talk about it. We'll talk about it. So you have to start from the top level. If strawberries will not grow in Nigeria, or if you cannot, you move downwards. So if strawberries cannot grow in Nigeria, then let's take out strawberries because it can be an extreme example for you to see it well. But you know that there's a time to plant yam. If you don't plant yam, if you're, for example, I'm not sure, I'm not a farmer, don't blame me if I'm wrong, but let's say you're supposed to plant yam in the rainy season and you start planting yam in December. The climate is not going to work. It will dry out before it can actually take roots and bud and blah, 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 blah. Right? So you actually have to consider what is happening in the economy before you now drill down to which sectors can thrive. So, for example, look at this COVID season, right? Okay, we are coming out of it, so it's getting better. We're beginning to do parties, we're beginning to do stuff. People are beginning to sew clothes again. But imagine the peak of the pandemic, right? And there were lockdowns and blah, blah, blah. People were still working from home. You can't say that you want to invest in a suit making business when the whole world is wearing jogging pants to work and tank tops. But guess what? In that clothes business, which is a sector, you can actually invest in children's clothes. Because whether or not there's COVID, children will still grow. If you have a 6-month-old, in the 6 months we've been in the house, the child will have become 1, you will still have to buy new clothes. And that's still in the same sector. Do you guys understand what I mean? So, and then if you agree with me, and then another thing I need to also explain is the fact that the economy is from the outside. What I mean by the economy is things that we see. The economy is in the news. It's not far from us. We know that I will talk about it because the next slide is actually let's select stocks. And I'll tell you how I think. So I've actually given you a clue to how I think about it, and then we'll actually go into it. And for that one, get your paper and pen ready. So I can give you so maybe you can actually use this right now, economy, sector, company, and then you, and I'll talk about what you means, right? Because it's going to be practical. I'm not coming to talk theory. All the theory was like in the first few slides, right? And I'll probably share the slide later for you guys to see. So now I've used the example of clothes to decide a sector. But in that sector, you now decide on the companies that can thrive. So if you say, okay, people will always buy clothes, their clothes will always wear out, and you decide, okay, any company in the clothes sector, I will just buy. It's not going to work for you, right? Do you get? Now, another thing also you need to consider, for example, agric. So think about it. Some people have made a lot of money from agric, but some people have lost money from agric in this year. People always, exactly, fantastic, agric, but then depend on how the company is positioned. If you're positioned to pay short-term debts, your leverage is high, meaning that you have a lot of short-term debts to pay. You will suffer because the lack of liquidity will make you go bankrupt before you hit your promised land of profits. So imagine if Mark at the beginning decided that he wanted to use money market, 2 months debt, to fund his 2-year project. Then the person that he gives, and he's assuming that, okay, the person will roll over after 2 months, and then COVID happens in those 2 months, what will happen? It will go bankrupt. And it's not because the business or the company is not good, but because the timing wasn't right, the structuring wasn't right. Do you get? There's so many things. But then the truth about it, the major thing I'm trying to say is that the answers are in front of us. And the idea, what I'm trying to do here is to get you guys to see how the things that you see on the news play into that investment. I hope it is clear, and I hope I've not lost anybody. If you have any questions, let me know. So now we're going to select stocks. We're going to do like a demo session by ourselves here. Question one. Question one, what is happening in the economy right now? Give me anything you think of, anything you see in the news, like recent news, just put it up here. Anything you can think about that affects your pockets right now. Let's type it. A recession. Recession is a big word. Inflation, rising prices. Okay. What does recession mean? Devaluation of the naira, insecurity, scarcity of FX. What else is happening? What else? Can you think of anything? Dollar rise, but that's not the economy. That's not just, these are just expensive food. Okay. Yeah. What else? What else can we think about? What can we remember? What policies have we seen in the news that we have no idea? Higher fuel prices, great. Now I'm trying to talk about things that affect you. COVID-19, fantastic. Things that affect you, not just, okay, yes, scarcity of dollar affects you, I agree. But I mean like real life things. So higher expensive food, deregulation, fantastic. Higher electricity bill. So now let's pick one. Let's pick one of these things, right? Higher food power is deregulated. Now let's pick one. Which one should we pick? Electricity, devaluation, inflation. Which one should we pick? Let me see. Let's use power, deregulation. So after you pick, so deregulation, what does deregulation mean? You didn't mention oil prices, because oil prices, wait, which power now? Which power is deregulated? Because I was thinking of fuel when you said power. Is that what you mean by power? Deregulation was for the oil sector, right? Oil, PHCN. Is it really deregulated? They're still price fixing now. They fix their pricing, but then the prices have gone up generally. So, but then let's pick fuel prices, right? Fuel prices have been rising. That's something that affects everybody. Now, what sector is that? Who knows what sector? It's energy. It could be oil. Let me see. Hold on. What sector? Oil and gas, exactly. Now it's oil and gas sector. Can you see my? It's oil and gas sector, right? Now, what? Now in the oil and gas sector, there are people, but okay, so the oil and gas sector. Now, what happens? What actually happens is the fact that when oil prices go up, fuel price in Nigeria will go up. That's what it means. Do we understand that? Do we understand that? Yes, I want to see, yes. So there's now a direct relationship between oil prices and our fuel price locally. The question is okay, now let me break it down. There are two types of oil companies. There are the downstream. There's downstream and there's the upstream. Upstream are the guys that drill, blah, 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 right? And downstream are the guys that sell petrol to you. The question is, who does it benefit? Which of these? So that's a sector. We've chosen a sector. Something is happening there. Which of these sectors? Which of the oil and gas companies will benefit from it? Is it the guys that are selling at the pump price, or the guys that are drilling? Who can figure? Who do you think it will benefit? The pump price sellers. Okay. So why do you think it will benefit the pump price sellers? I want to hear your thoughts. Why do you think it will benefit? Why do you think it will benefit the pump price sellers? But did they get it cheaper? You see, this is not predicted. I'm just going with the flow. I've not even thought about it deeply, but I'm poking your answers. They can, but they're not fixing a price. Okay, let me explain. There's a template. What they put in that template is that they just plug in the oil price, the oil price, right? Well, true, they didn't get it cheaper, right? Because they plug in the oil price and it calculates the pump price they should use. So the only flex they have is that 168 to 170 that they can decide where they want to sell at. And for competition, most of them are doing 168 right now. Because the dealers charge the pump sellers more than, so they have to increase theirs, right? Actually, yes. Now let me explain. I hope I'm not too fast so you guys actually understand what I'm saying. Let me paint a big picture. The major thing that is driving the price of fuel is the fact that oil prices are going up. Now, what has happened before now is that the people that were drilling, if you remember, it was in the news, or general news, if you get what I mean, general news, and that's why news is actually important. You have to read the news. I think I sent an email out for those that registered early enough to tell you that you need to follow some certain handles on Twitter. You have to just follow just to have an idea of what's happening, right? Now in the news, I'm sure you heard that some of these companies had so much oil, they did not have anywhere to sell. And so oil prices crashed. So if oil prices crashed and is now going back up, who does it benefit? The people that are drilling because they can sell. However, the people that are doing downstream, they are just receivers of price. They are not necessarily, they are not the ones selling at a higher price. It's a fixed spread for them. Do we understand? Is it clear? I want to see that I'm not missing anybody out. I'm carrying everyone along. I need responses in the chat. It benefits upstream companies. Yes, it's clearer. So now, if I was going to do oil and gas, if I decided, okay, I want to be exposed to oil and gas, right? And I knew that the stock market crashed. Yes, because they can't manipulate, exactly. They have no control. It's actually a fixed price. Now, can you see that? I've given you information that it is actually in the news. The fact that there is a price template is in the news. But it's that when you hear the news, you don't really realize what you are hearing, or you don't really process what you are hearing to understand that it's actually a template. So the only thing that is changing is the oil price. Once oil price changes, it just think of an Excel sheet that is familiarized. And once they change the oil price, it produces a new price. And every month, when oil price goes up, it goes up. When the oil price comes down, but their percentage of revenue, their everything is fixed. Even now, they might actually be losing now because people will start doing alternatives. And the truth about it is that if the forecast is that oil prices are going to keep going up, then the truth about it is that everybody needs to have an inverter in their houses. Then if you also realize that the stock market is for long-term investing, then you know that long-term play, the downstream sector has to rearrange themselves, or their stocks are going to become water after a while. Or they have to reinvent themselves. So you have to now look out for which company is trying to reinvent the wheel, which company has foresight, which company in the downstream sector is looking at alternatives, is now investing in solar, is now saying they want to have a solar energy department. Do you see how, do you guys understand how I just, so what we now do is that, so after you've done this, you've decided on the sector, you're now looking for the kind of stock that fits your bill. Is it clear? Nobody's talking in the chat. I need this chat to be buzzing. Anybody with questions or reservations? Anybody that is just thinking about, anybody that this is new to, that hasn't thought about it before? What do you mean by bills and as in pockets? Following me? Okay, great. Okay, great. I'm not sure what you mean by bills as in pockets, but if you explain, I will respond to it once I get what you mean. So what we now do is that we now look at companies that are, so let's look for an upstream company we can invest in. Now this is where, if you've watched anything that I any of my videos on YouTube, I always talk about, okay, you have to have an asset management firm, even if you don't use them for anything, just to get their emails, right? One of the things I probably can share this screen just to show you. Let me stop my sharing, then I'll share another screen with you. Can you see this? Can you see this PDF? This is an example of what stock brokers send to their clients, and I just downloaded one, but this one was like 2 weeks ago or something, right? So if you go through the thought process in your mind before you look at this, because in every stock recommendation, if you scroll down to the bottom, let me see. There is this thing they call a disclaimer. Associated or subsidiary companies therefore cannot be held responsible for any loss suffered by relying on the said information, as this information, as earlier stated, is based on publicly available information, analyst estimates, and is meant for general purpose information, and should not be construed as an offer to buy or sell. What is that? It's a disclaimer. They are telling you that even though we've told you, and guess what? They actually have recommendations at the side. They will tell you, so let me show you, this is the heading, right? They will tell you, can you guys see it? Is it clear? Is it legible? Is it legible, guys? Yes. Okay. So if you see at this extreme right hand, they give recommendations. So hold, under review, sell, under review, hold, buy, right? But this was done 2 weeks ago. For example, this, let me see, could be zoomed in a bit. Okay. Now let me explain. They are just giving their analysis based on what they think. So no matter how, can you guys hear me? Someone needs to mute themselves, right? So no matter how much advice they give you, they can be wrong. They can tell you to hold a stock that's based on your analysis you're not comfortable with. One of the things, like I've told you, that the environment is most important in determining the direction of the stocks. Remember, now I'm going to tell you things I talked about before. The fact that whatever happens in the stock market does not affect the price of it, does not affect the company. Think of it. Zenith Bank came down this year, came down to 10 naira. On a normal day, you think that a stock that was at 20, 25 naira that crashes by over 50%, right? You would think that the company has a problem, but no. Zenith Bank still declared their normal 170 billion to oppress us. But what happened? The environment determined the direction of the stock, because it's simply a case of buy and sell. Is that clear? Is it something that can you guys connect with it? Because one of the things that I try to make sure I do is to explain these things in simple English in a way that people can relate with their environment, so that when you see it's not clear, what is not clear? Which part don't you understand? I need to tell me what I should repeat in another type of English. Let me repeat that statement again at least. So I said that when Mark came to the market and he raised 5 billion. He raised 5 billion units of his stock, he issued 5 billion units of his company at 1 naira. So he raised 5 billion and that was it. He got his 5 billion and he moved on. Right? Now, what happened afterwards is that somebody was offering the stock at 1.1 naira. Now, imagine if it was a year like this where stocks have gone up. Imagine if the stock price went up to 5 naira. The truth about it is the 5 billion that Mark raised for his company is just all he gets. Nothing changes that. Whatever happens in the stock market does not affect, if stock prices go up, if stock prices come down, it doesn't mean that the company itself has an issue. It could be the economy driving the direction of stocks. Zenith is still great as a company, but the economy was not good, so the price went down. That is it. Fantastic. Easy way to explain. Zenith is still a great company, but the economy was not good. But the economy was not good, so the price went down. Now, if, for example, I've analyzed banking stocks and I've decided that Zenith is still a good company, what should I do when everybody is selling? I need an answer. buy. So you could hold if I have cash, because let's say I've been buying at 20 naira, buy or hold. Exactly. You buy or hold, because then it will still declare their dividend. They're still fine. They're still all right. All the things you are seeing in the stock market up and down is just noise. The company is still fine. So when you are trying to build a portfolio, think about it from the fact that, number one, do I really like this company? Is it a company that I want to be proud to be an owner of? If I'm not going to be proud to be an owner of this company, then honestly, you should not be touching it, even though people are saying they will buy, oh, they made money, oh, they've made money. See, if you want to do a trade, that is just what it is, do a trade. But if you, by trade, I mean short term, oh, throw in money and come up, understand the risk, you can hang. You can hang there. So don't put money you can't afford to lose in that. Do you get? But look at it, drill down. Another, so in terms of cues, there's some sectors that would always thrive. Banking sector, because the whole economy is riding on the banking sector. So in Nigeria, if you want to buy stocks, always hold banking stocks. But the reason why banking stocks will always thrive is because the economy is riding on the banks. There's nothing you can do in large size without the banking sector. So even if there's a problem, central bank will still support. The banking system is not going to collapse. The economy will first of all collapse, then it will now tilt towards, then trickle into the banking sector. Because if the economy collapses, for example, or let's say currency exchange rate moves to 10,000 naira for $1, it's still in a bank that you do your transfer. You still pay your fees on the transaction. Do you understand what I mean? So banking sector will always thrive. Now, the pension funds. I mentioned that the pension funds are the major investors. One of the rules that guide the regulator of the pension fund is the PENCOM, Pension Commission. That's what they're called. But one of the rules that guides them, because it's our money, it's our retirement money that they are using. One of the rules that guides them is the fact that they can only invest in dividend-paying stocks. A company must have paid dividend for 3 years before a pension fund can invest in it. So I'm giving you a tip. If you are looking for a stock to invest in, right, after you've done your analysis, drill down, sector, company is good. If the company pays dividend, then you would see that most times you find that the companies that pay dividend regularly, their pricing is always higher because there's usually demand, and the people buying them are the pension funds because they cannot touch a company that doesn't pay dividend. So I've given you free scope. So me as an individual, I don't buy companies that don't pay dividend because it's just a waste of my. Okay, I say that again. The major entity that drives the stock market, because they're the ones with the most amount of money, right? I've said it earlier. You see, all that theory I started with, I'm not trying to tie it to reality. The major people that drive the economy, that drive investments, wherever they enter, they're the ones, whether they enter, they're the ones that lead. If they go and buy bonds, they're the ones that will pull down the rates. If they go and buy treasury bills, they're the ones that will pull down the rates. If they buy stocks, they're the ones that will push up the price. Right? The pension funds, because they have a lot of money and they need to invest. And they need to invest, right? Sorry, someone was asking me a question. And they need to invest. So what happens is they have an investment guideline. By that, and that investment guideline specifies how much they can put in stocks, how much they can put in bonds, blah, blah, blah. But that investment guideline says that a pension fund cannot invest in a company on the exchange that has not paid dividend for the past 3 years, meaning that they can only invest in companies that pay dividend and have been paying dividend for the past 3 years. Is it clear, Esther? So I'm giving you scope. Go with the big boys. After you've done your analysis of the sectors, I've told you that, for example, stock market, banks will always thrive, right? I've told you another sector that will always thrive is agric. I'm giving you. You can still see my slides. Agric will always thrive because people need to eat, right? Now, people need to eat, and agric is a fantastic sector. However, there are only 2 stocks that represent the whole of agriculture in Nigeria: Okomu Oil and Presco. So those stocks are always on bid. I'm just explaining. These are tips that you would figure out as you go along the way. I hope you guys get it. So, and then it shows in the price. I bought Okomu Oil 2 years ago-ish, around maybe 30 naira, 40 naira-ish. I can't remember the exact price. But Okumu has kept on going up. It has kept on going because if you have a sector allocation, right? Also, they are right in front of me. I'm actually scrolling down. Okumu Oil and Presco. What I would advise, I'm going to tell you how to start and how you can get this information, right? So you don't need to go into the details. They are right in front. So this is Okumu Oil here and Presco, right? Then ideally, we have Dangote Cement. Dangote Cement in a world of its own, right? Construction will always thrive. Construction will always thrive, and we know our country. Dangote is just the person to follow because he's favored. So go with the favored child, right? Generally, I don't invest. I have a portfolio, like an investment portfolio, that even if prices go up, I'm not selling, right? So with that portfolio, I actually select the stocks that I am buying intentionally, stocks that I believe that, okay, I can hold this thing for, I'm holding this and I'm comfortable with it, if you get what I mean, right? So I would say construction, and we're in a growing economy. Real estate is poor. There's a large window for real estate. So construction is still a sector. So drill down, which stocks would you buy there? Then telecoms, we will always make phone calls, right? Can you guys see how these things pan out, right? But then after you do telecoms, I will buy MTN, but I may not buy Airtel. But if you decide to do your research and you are comfortable, go ahead. But is it clear, my thought process? And is it simple? Is it a template that can be followed? I want to hear your feedback. So let me go back to sharing the presentation. So I'm sharing my screen. It's a very logical template, yes. So we move from company, yes. Fantastic. Oh, I love that, ESCY. Now, I will advise that you should do your analysis yourself before you now start looking at stock recommendations. But don't do things in isolation. If you think you should buy a stock and somebody is saying you should sell it, ask why. And a professional is saying sell, ask why. Don't just walk in. I don't say I know and just do, right? I hope that's clear, because we don't all have all the information. So it's very important. You can't outsource your health and your finances. You have to engage, right? I say that all the time. Now, one of the things I realize that people struggle with when it comes to selecting this thing is, the truth about it is you have to do. No matter how much, I just said you can't outsource your health and your finances, right? No matter how much you try to think, do analysis, build knowledge, you actually can only learn, like actually build that money with by doing, right? And one of the things that I've realized is that I've had conversations with people about this, but in the end, they are so excited and passionate when they like first start. Oh, fantastic. But then 1 month down the line, they've done nothing. We're like, why? Ola, the things you explained to you, I can't even remember again. I'm not even sure. And I now got to the point where I was going to buy. And then I'm like, oh my God, am I sure? Am I not doing this on my own? Blah, 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 you know? And so I realized that a lot of people, as much as, for me, I'm a finance person. And let me not lie, even after I do this ESCY, I love this ESCY paroles, right? Even after I do this, I actually still talk to people. I actually run my analysis with people. I actually still talk to people about it, because people would have ideas. So for example, imagine if you sat on your own and analyzed the oil and gas industry, and your conclusion was that the downstream sector should make money off it, right? When somebody comes and says, no, think about it like this is the flip side. So that conversation would have made you see a different angle to it. But I realized that a lot of people don't have those people to have these conversations with, and it can be a little dicey, right? So you now become unsure of yourself and the things that you've learned, you are not now sure, you don't implement it. And so after a while, you lose that knowledge, because it's a muscle that needs to be built up. So I decided to start the Money With Club. Now, basically, the Money With Club is actually a club where we would have discussions like this. we would focus on an asset class, and we would decide, we would drill down. We'll decide on what stocks make sense. So we'll have, and the idea is I'm going to have a couple of people in different sectors or different career paths. I'm not looking for finance people, definitely not finance. By when I say definitely not finance people, I mean that, okay, you might be in investment banking, but if you are like an asset manager, you know my target community. I'm looking for people that work in agric. So when we're talking about agric, we say, okay, what do you think? Do you get, when you're talking about like, okay, this is really what happens in this sector. So this is why this is this. Or we're talking about oil and gas. The person in oil and gas would say, this is this, this is that, this is that. And we'll have those conversations and make those informed decisions, and everybody's better off for it. So basically, I'm actually launching the Money Week Club. I'm starting in January, and I'm starting with 20 slots, but I've already had people that have taken up actually 7 slots, but I'm leaving it to 15 that I've been. My target was to start with 20 people, and we would build a community, and then in June next year, I'll do like the like large public opening of it. I would share the link here, and you guys can actually check it out. The only thing is that once I hit the 20 people slots, I would shut it down, because I'm trying to find structures that work, right? And I can actually go through the website with you guys so that all your questions are directly answered. Because we're actually at the end, there's not much, and the next thing I'm going to tell you is how to start if you decide to start. No, not if you decide, as you decide to start investing in stocks. Why should you invest in stocks? Because they are the only option right now to beat inflation. Your interest rates are too low, it makes no sense. And then if you think about it from a long-term perspective, right, they are the ones that will store the best amount of value. Hardly do you get 100% return except you are doing something highly risky. So let's just go through it. So if this is you, then let's talk, right? You earn quite well, but you feel you're not making the best of your income. You save quite well for projects, but after that, you just go back to status quo. The way prices are rising, the value in your bank account is not valuable. Like, think about it. If you said you had money, you had 10K in your account and you wanted to buy a bag of rice 3 years ago, you can't buy a bag of rice right now, 25 kg. And that's actually like a life impact of inflation. But then in terms of stock market investing, you could have made your dividends and then your capital appreciation. But your interest rates are low right now. You have no options there. And the most important thing also is retirement. It is one thing, if you are between 25 and 40, retirement is 20 years away. You have to intentionally plan for it. So you need to put your finances in order. So what's the Money Week Club? It's basically a community of budding investors that are intentional about building a profitable investment portfolio. The question is, why should you work alone? What would you have in the club? We'll have weekly communication on available investment options. And then every month we'll have an execution focus. What execution focus means is, okay, if we are going to start investing in agric, for example, we'll find somebody in that space. We will get the best hands. We'll drill down. We'll decide on who we can do, blah, blah, blah. And the idea is that by the time we finish that, everybody would have agric in their whatever. If we're going to talk about estate planning, we'll get the person that runs a trust. We'll get the trust guys to come. By the end of that month, everybody has their trust portfolio, their trust account set up, their will set up, everything, you know. And then the one that I find totally exciting is that I'm going to be bringing senior experienced investors. Like, if you think of senior, locally, globally, you're going to be getting senior investment guys that have invested, I'm not talking about asset managers. I'm talking about real human beings investing their own money and have turned it over, right? And we're going to bring them to talk about investing, because with investing, you can see that I've brought an angle that you most likely, you may not have heard before, how to drill down. So there are these things that there's a lot of money wit around, and that's why the theme of the club is the Money Wit Club. So there's a lot of wit that we can learn from older experience, especially for people that have invested successfully in Nigeria. There is a scope and it can work, right? Because people have made it work in Nigeria, right? And so these are the options. You can pay per month and pay quarterly and then annually. Now, this is the better pricing. Better, by better, I mean better version, because it's just for 20 people. The pricing will go up in June when I launch publicly. Now, so if you are interested, you need to subscribe now, because once we hit 15, I'm going to shut it down, because I want to start with a smaller community, and we evolve as we go along the way. So this is for you if you don't know where to start from. Investment options are confusing. You don't have anyone to run your investment ideas by. There's so much information, but you're not clear on how to apply them to your personal situation. You've taken classes, you've had serious conversations with your finance guru friend, you were gingered, but now you can't remember what you learned. You've lost the confidence and the clarity you had right after the conversation. Now you're looking for another class to tell you what you already know. But the truth, the actual truth, is that putting your finances in order is a journey and not an event. It is, no one can actually sit down with you and put all the pieces together in one call. You need education and taking baby steps to happen concurrently. And it's tough to stay focused on your long-term money goals without a community. The truth about it is that even people that don't necessarily are not necessarily in clubs, you would agree with me that they have people that they run it by. They have people that give them ginger. They have people that will call them and say, what stock are you looking at? Even though, because I have that, I don't work alone when it comes to investing. I have people that I talk to. I have people that, like, what do you think about it? It's like, no, I'm not touching this one. No, I won't do this. And then me, I'll give my own perspective. Then we can all decide. Sometimes we'll end up buying I just gave the order. Oh man, this is not looking good. This is looking good. And of course, the truth about it, the reason why I hammer much on baby steps is because if you, for example, sit down in your house and do an analysis, you have to understand the stock, and it takes a while. So I won't say that all your life savings in 1 million, and then in one analysis, you just put the whole 1 million in one stock at once. It doesn't work that way. It could go good, but it could go bad. You have to grow with the knowledge you get, and it's a long journey. I would rather you say I invest 50K every month into stocks, as against I do 1 million now and I don't invest in stocks for the next 7 months. Now I remember again, or I don't invest again. I just do one, bam, and then I don't invest again for the next 6 months, and then I do another one, bam, and then you get, there's no consistent growth, and it's only when you remember. So that keeping top of mind is also very important. So yeah, the link is available. It was 20 slots when I first set it up, but right now you have to hurry while stock lasts. So let's finish up the presentation. So yeah, that's the Money Week Club. Once you sign up, you get more information from me. I will pull down the link by tomorrow, because I intend, as in either of two things, tomorrow or 15 slots gets filled up, whichever comes faster. So yes, common stock investing pitfalls. You have agreed with me, ignoring the economic environment. And that thing is, I made money of this stock last year, so I will be profitable this year. I will invest in the same stock. The truth about it is, the factors that you have to understand, the factors that made you make money last year, because if those factors change, then you have to change your strategy. Case in point, this year and this season. Now, I have not explained it, but what is happening in the stock market right now? I still go back to our pension funds, and you have to monitor, you have to understand the nature of the buyers and the sellers. The pension funds fundamentally have been buyers of bonds and treasury bills. But if anybody has been reading any form of news, you agree with that, you would attest to the fact that treasury bills have gone to like 0 point something. So nothing is happening there. So imagine if you contribute to your pensions, and then after that, you now see that after 10 years, you put 1 million, and then all you have is 1,010,000 naira. It can't work, right? So the pension funds who hadn't really been in the stock market for long, they hadn't really been active, they left it for the foreign investors, right? This year, because of the low interest rate, they've had to move back to the stock markets. And that is why the stock market has actually rallied the way it has. Now, the question is, going forward, what do we expect to happen? In my opinion, the interest rates are going to remain low for a while. Why do I say so? Because there's a recession. Interest rates need to be low so that people can borrow and the economy can be built up again. People need cheap funds to borrow to fund their businesses, right? So if interest rates are going to be low, what do I think will happen? Pension funds will stay where they can get some returns. Bearing in mind, that apart from capital gains, there's also dividend. So if I invest in Zenith Bank at 25 Naira and Zenith has a history of paying 2 Naira 50 kobo in dividend, it means that last, even if there's no capital gain, meaning that even if Zenith Bank doesn't go from 25 Naira to 30, I will still get dividend in March. 2 Naira 50 kobo. 2 Naira 50 kobo over divided by 25 Naira is 10% return. So if treasury bills are offering 0 point something, and in 1 year, I'm still able to get 10% return on the stock market, isn't that attractive? Now, imagine, for example, the central bank comes, which is part of the economy, which is part of the things that affect the economy, right? The central bank now comes and takes up interest rates and takes it up to like 20%. What will happen? They will sell. Do you get? They will sell. But the question is, me as a long-term investor, what would I do? Because I know that I'm going long-term, I would buy. Right? Which is now the next investing pitfall, not aligning your personal goals with your investments. So because they are selling, right? You have cash, you wanted to buy, but they start selling. You now say, they're selling. I'm not buying again. The question is, do you want to buy when it is going up, or do you want to buy when it is coming down? You want to buy when it's cheap. So if it is cheap, why are you now scared and you have the cash? And a lot of people do it. They will keep watching until people now start buying. It has turned. So, for example, I bought, and this year I've actually made a lot of money on stocks because I understood what was driving it. Number one, I had been in this market, 2008 stock market crash. I was here in 2016 or so when I think the stock market crash, was it 2016 or 2015? 2015, 2016-ish. There was a stock market crash also at that time. I'm not sure which year. But basically, I saw the movie, I've seen the movie before. And then I'm like, I've seen this movie before. I know what's going to happen. So even though COVID is happening and then stock prices are down, Zenith Bank is still a good stock. Nestle is still a good stock, right? People will still buy fast-moving consumer goods any which way. Nestle is still a good stock. So I bought Nestle at 769 when everybody was running away from the market. I bought Zenith at 10 Naira. Where is Zenith today? But if you think about the logic I've just analyzed right now, do you realize that it wasn't a gamble? It was a logical decision. It was not a risky decision. And I think there was one quote that I omitted from Warren Buffett. It says, risk comes from not knowing what you are doing. Meaning that you're just doing something because everybody's doing it, but you can't really explain why. At the point where I was doing it, it was not a risk for me because I knew clearly that Zenith is still a good company. The worst that will happen is that even if this rate stay this low, I will get dividend next year. And if it goes lower, I will buy more because Zenith is still a good company. So I will show you mine. So I'll end with showing you my own stock portfolio. So financial independence is when your investment returns can fund your lifestyle. You are going to retire one day, right? And it's what you've built up while working that will fund you when you retire. Now, if you think about the fact that interest rates are low, for example, your pension funds guys are having to invest at 0 point something because of very low rates, right? You know, you cannot actually depend on that, right? You have to also do something, right? So think about it. It is what you pile up while you are working that will fund you when you retire. You don't want to be hustling for contracts. You don't want to be dependent on your children to fund your lifestyle. You don't want to move from the center of Lagos to outskirts because you can't afford rent. Yeah, you don't want those kind of things, which is why the Money Week Club is there, because we're going to do a lot of different things. We're going to talk about real estate. By talking, I mean we're going to talk and we're going to do. So we're going to actually bring the best people together, find the right partners, and execute. We'll do private equity, blah, 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 blah. Right? So if it sounds interesting, join the gang. The link is in the chat. So my current portfolio, these are the stocks that I buy long term. I was a trader, so I trade, right? Meaning that there's some stocks that I don't necessarily want to hold long term, but I would just, I think the pricing, I do technical analysis and the pricing looks good. I would buy and hold it for 2 weeks, 3 weeks, and sell. I trade. But you can trade when you have studied the market for a while. Don't start off with trading. Don't come with a trader's mindset. Come with a long-term investing mindset. Now, so I have Zenith. So I will explain why. I've explained banking, why I buy Zenith. And Zenith is my only banking stock. I don't buy GTB. I don't just buy GTB. Zenith and GTB are around the same whatever, and Zenith is cheaper, so I always buy my Zenith, and I'm fine with Zenith. Now I have Mansard and ICO, and you will ask me why. Now in Nigeria, the next biggest blow in terms of sectors is insurance, right? Why do I say that? You love GTB. Everybody has their thing, so be true to yourself, right? There's another stock, First Bank. In my life, I've never invested anytime I buy First Bank, it always goes down. So someone literally told me, oh, let's buy I have one partner in crime when it comes to stocks. Let's buy. I said, I don't buy First Bank. I said, since I was born, I never made money on First Bank. I will buy First Bank, hold it for 2 years, I will make a loss. Me and First Bank, we don't agree, right? And there are stocks like that. So it doesn't, and then it's just that I think what actually happens is that I don't have First Bank in my portfolio. Someone will come with this wind, and I end up following the person. And when I follow the person, that's the wrong time to follow the person. And I will end up getting stuck. And it always happens. But the ones that I sit down with my mind, analyze, and say, okay, let's do this, I have been making successful money. Now, I want to explain my Mansard and my ICO. I said that the stock market, the next blow that will blow, in my opinion, is the insurance sector. Before now, like way back, the pension fund wasn't really well structured, blah, 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 but regulation came. The truth about it is we're going to get to a point where everybody's going to have to do health insurance. Everybody's going to have comprehensive insurance for their cars. All this, like you want to do mortgage, you must have housing insurance, you must have insurance for your house, all those kind of things. So what I do is that Mansard and ICO, they are very cheap stocks. I have an allocation. I say, this is my permission to blow. The truth about it is that when that regulation comes up, it will come up overnight. They've been trying to do some things, and they've been talking about insurance recapitalization. That is the beginning of structuring that industry to blow. The truth about it is that insurance recapitalization, we're talking about it for 2 years now. One day, it will be in the news while men slept, and there will just be that thing. The next thing, ICO that you're seeing, or Master that you're seeing at 2 naira, next thing be 3 naira, next thing be 4 naira. So me, as a long-term investor, I say before I retire, insurance will blow in this country. So this is my permission to blow. Nestle is, everybody will buy fast-moving consumer goods. Nestle is here to stay, and all my stock market friends, like they'll tell you that if you want to buy stocks for your children, that's what they say. Oh, don't follow me. I follow them, but this is third-party gist. If you want to buy stocks for your children in Nigeria, buy Nestle. And the time when they were telling me was at 1,005, right? And I'm like, you guys have chests, 1,005 for one stock. What's happening there? It said it's a long-term stock. Esther, don't take it as stock recommendation, or wahala for who decides to buy stock on the back of what Ola said, because as all stockbrokers, after they put their stock recommendation, put disclaimer, and put my own disclaimer, buyer beware. Now, Okumu oil, no, I understand the comment and the future trend, fantastic. And that's how to think. And that for me is, I'm very particular about MoneyWith, and that's why I named the club MoneyWith. I'm very particular about you understanding it for yourself. You can't outsource it. See, you ask a stockbroker to give a stock recommendation. After you finish recommending the stock, he will now put disclaimer at the bottom telling you that you're on your own. So imagine if you just buy because they said buy. It's your money. You can't just leave it to somebody else. Your mind must be there. I'm very, very, very particular about it. You can't outsource your health and your finances. And then MTN. Okay, Okumu Oil is Agric. There are only 2 stocks with Agric. And I did research and I settled with Okumu. They still had, at the point where I did that research, they still had room, they still had undeveloped hectares of land that they still had room for growth on. They still had capacity, they still had capital. I did my research and I'm like, okay, I'm fine with Okumu, and I put it there. Then MTN, everybody will make phone calls. MTN is one of the well-positioned telecoms companies in Nigeria. Yes, so wide diversification is only required when investors don't understand what they are doing. Meaning that just buy different things, one will click. But by the time you start understanding what you're doing, you begin to narrow down. And it's Warren Buffett I'm quoting here, is a big guy in these matters. So yeah, why investing is great. You're going to retire, right? Your dividend is passive income, right? Oh, inflation hedge, sorry for the typo. By predictability, for example, the companies that pay dividend, they have a dividend history. Everybody knows how much they pay. You can say, okay, I'm going to invest in this stock, give or take 2 naira. I'll get my 2 naira cash. I can plan with that 2 naira cash, right? And so those are things. Now, I want to put this in context of life, right? Remember Mark at the beginning, the reason why he went to the capital market was because he needed long-term cash. That is the spirit of the stock market. It is long-term investing. Like, I have some very interesting quotes that I didn't want to overload the presentation with quotes. There are different quotes by Warren Buffett and co. That the truth about it is that the stock market is a place to transfer wealth from those who are impatient to those who are patient. So there's a patience game or patience and money weights. So how to start? Open a stockbroking account. Easiest way to open a stockbroking account, download an app. I recommend Meristem. I recommend Meristem, not because there's anything special, but because I downloaded their app. Somebody told me about them. They didn't come to meet me. I downloaded their app. I created the account on the app. I didn't have any issues. I get their emails, blah, blah, blah. And I have my discussions. I instruct them to buy. And as soon as I do a market order, I get like 10 minutes later, my email for my execution is done, right? And they still have their stock recommendations that I look at, right? Now, another thing that is important, bearing in mind that it is stock market. Yes, I use Mercy. Yes, I actually agree. It's very, very easy to invest, and it's actually it's seamless. It's quite seamless. That's why not like I know them, personally, or have any business relationship with them, but just because it's seamless. So now, the next thing to decide on how much you can invest long term. So even though markets might move up and down, the truth about it is information can change over time. Things can change over time. As long as the company is good, over time, you will find that the price of the stock will end up going up, right? But you need to be able to wait it out. If you were in December, November, and you decide to put school fees money for second term in the stock market, and for any reason the stock market crashes, you would be stuck. You would have to crystallize that loss, or you have to borrow money, or you have to there's just so much pressure, right? So decide on, even if it is that you're able to save 100K every month and you say 50K goes to stocks, the other 50K, some will go to emergency fund, blah, 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 blah. There's a lot of that. You can do that, right? But know how much you can invest long term. Another thing I also do is that I actually do like personal financial planning. I would send out an email with the link to watch the replay. And if you are interested, I'll also add the link. I'll add the link, right, for information around personal financial one-on-one planning, where you can actually look at your finances, set up your goals, and we'll decide on this, how much goes to this, how much goes to that, and then we would push you out there. You are good to go. Now, the best approach is for you to take that class and enjoy the Money with Club, where you have confirmed ginger and information, right? So this is me selling my market. If you're interested, the link is still there. So the final thing is buy. It's as easy as that. You have to get your feet into the water. You literally have to get your feet into the water. You can't be using sense. You won't learn until you get engaged. You cannot, there's no escaping it. It's actually education and baby steps. They have to work together. Education and baby steps. So after a while, you begin to understand the trends. You begin to understand that, oh, I saw this in the news. This is what happened to my stock. I saw this in the news. This is what happened to bonds. I saw this in the news, because everything is in the news. Good morning. Every single thing that you need to make your decisions, it actually is in the news, like regular channels, news, Twitter. It is in the news. It's how you interpret it that matters to you, that determines whether you make money or not. So join my club for Money with So yeah, that's true. While you guys are here, I would like to, at the end actually, so thank you for your time. Sure. Thank you. Oh, someone is just joining me. I hope so everybody saying thank you. So I trust it was useful. We have the same username. Oh, really? Oh, maybe same surname, Oladele. Oh, great. So yeah, the replays will be up. And I will shut down the Money Week Club registration page once I hit that target. Of course, my channel is still going to be up, and I know for those that have subscribed, if you've not subscribed to my channel, let me put my link up here, youtube.com/Ola Oladele. Please do subscribe. I provide a lot of intelligent things, and also please, I also do appreciate questions, because it also helps me know where people miss it, because I have a lot of experience in this. Like I've done financial markets, economy, blah blah blah. I've read the book, I've done CFA, I've done it, but then I realized that the techie people are disconnected from the people that need to invest, right? So I'm like, just think of me as that bridge, yeah. Think of me as that bridge. So your questions help me see where the gaps are. Bye.